Let's talk commodities with Peter McGuire, Managing Director at CWA Global Markets. He joins us from Sydney this morning. Peter says gold is still the place to be for investments in 2010. Peter, the gold bull, as always, commodity story, still intact, you think? I mean, gold and oil still poised to rally further in 2010?
Well, good morning, Haslinda. Yes, I think oil, we'll just touch on that first off. Probably it's going to be range-bound unless we see something dramatic as far as geopolitical. I think $70 to $80 is what OPEC's after. And the US dollar seems to be strengthening at the moment due to the crises in Europe. But when you look at gold, it's rallied very strongly since this time last month, Haslinda. It's up the best part of around about 8 or 9%. So we think that there's certainly far more upside. It'll be just a continuation of a very strong bull market since around 2004. Haslinda.
It's rallied, but not as much as even you expected.
No, we didn't. And remembering we had that contagion effect as far as Dubai, and then that was moved across to Greece. I think the next shoes to drop will certainly be, Ireland's a basket case at the moment. Spain, Portugal, very high unemployment numbers, and of course then to Italy. So the pigs are going to be major concerns across all of 10, and that'll play out. But one thing we need to be mindful of, Haslinda, the gold price is at all-time highs in British pounds. So it'll just be a little bit of a catch-on here. I think those currencies will continue to probably be shaky. The US dollar may strengthen against them, but longer term, Haslinda, there's only one way for the precious metals to go, and that's up.
But people are now saying that the dollar will get stronger and stronger. There's a feeling in the market that the ECB will be in a prolonged mess. The Greek debt problem isn't going away anytime soon.
No, it's not, certainly, and they take years to work out because it's inherent. As far as Greece is concerned, it's a cultural shift that needs to take place as far as taxation and cutting of costs, and the government needs to be very proactive on that. The same needs to be introduced across those other regions, as we mentioned, in Europe. So for that to take place, you're talking about an intergenerational. As far as the euro is concerned, yes, I think it's going to be a little bit shaky, and the pound. The US dollar may continue on its upward trend, but overall, Haslinda, they're printing money. They're going to keep on printing money, and I think that as far as we're concerned, we're going to see higher prices for most of the commodities.
But what are the risks that gold may slump?
Well, it may slump to $1,000. I don't think it's going to go much under that. Even Mark Faber believes it won't crash through 1,000, Haslinda. It's been an incredible rally since 2004, and that needs to be taken into some context. Any market that rises 25 to 30% compound year on year for 6 or 7 years goes through highs and lows. But the trend is your friend, and we're conscious that if you're buying ETFs or physical or derivatives, I'm sure if you get the timing right, over the longer term, you're going to do very well out of it.
Okay, so I'm guessing it's going to be a pretty volatile ride nonetheless. It's not going to be a smooth upswing for gold. Tell us, what are your targets? What are we looking at year-end by next year?
Well, Haslinda, we were conscious of, with 1,300 by Easter and that sort of that mindset. We think that 1,300 is very achievable. We're still conscious of that in 2010. So we've just put the end figure out a little bit. As far as next year and the years ahead of us, very conscious of 1,500 as the next headline number, and then by this time in another decade, it'll be well through $2,000 plus an ounce. Now, there's very strong supporting data for that. We don't think that the world's going to turn on a shoe here. It's very, very long, slow growth, and that's going to underpin the price of precious metals.
Is it okay for me to be buying my gold bars now? Good price?
Well, Haslinda, I think, even someone like you should be getting paid in gold, and you do far better than probably taking Singapore dollars. I know you've got a little taxation up there, but just take pay in gold. We'll have a word to someone there.
I'll speak to my bosses right now. How about copper, Peter? I mean, that earthquake in Chile spooked investors. Copper slumped, but sentiment now stabilizing. I mean, Codelco, Anglo-American, they have returned to full capacity.
Yes, they have. We're worried about the infrastructure and, of course, the ports, Haslinda. You looked at electricity and so on, and the other effects. Now, no one had a clear indication you had to be on the street there to actually see what the devastation was. And as far as the mines were concerned, they're north of the quake zone, so there was certainly some major damage, but it didn't really affect the mines themselves. Electricity was shut down for a little while, and the infrastructure's okay. Some of the ports are still shut, but we believe that will resume over the next week or two.
Where do copper prices go from here, Pete? I mean, there are people out there saying that prices have gone way ahead of fundamentals.
If I look across copper, lead, zinc, nickel, aluminium and tin, they all bounced incredibly hard in 2009. So it's been a very strong growth over the last year, Haslinda. They were smashed at the end of 08, absolutely decimated. Some of them were down, you know, the best part of 60 and 70%. And so from that level, they've rebounded very strongly. I think you're going to see a little bit of sideways growth for the base metals. I can't see them being, you know, showstoppers over the next year or so. But long, slow growth. I'll bring that forward in the next 6 months or so. They've moved up too quick.
Demand and supply. You're looking at copper consumption in China rising about, what, 9% this year? Any risk of that given efforts to rein in growth? I mean, China is easing on its stimulus.
Yes, it is. Look, it's a very hard one to get a true figure. You look at the GDP numbers, you look at what the supply and demand fundamentals are. We're still conscious that that 9% restocking of inventories, you can't get away from I suppose, the reality, Haslinda. It's a massive nation, a huge population base. And when we talk about China, we also extend that across to the other Asian basins and, of course, India. So there's massive consumption, the whole hyperdrive of that basin. And we're conscious that you're going to see continued strong demand coming from there.
Pete, silver, liking it?
Yeah, very much so. I think the gold to silver ratio is out of whack. I think that there's more upside probably in silver and palladium and platinum. Gold will be very strong, but I think those other metals have got more upside, Haslinda. Silver probably through 20 by the end of the year. Silver's not only a precious metal, but of course industrial demand. And we're conscious of where it's going and where it's traded. So a little bit more movement into the silver market.
Okay, Pete McGuire will have to live there. Happy Friday, by the way. Peter McGuire, CWA Global Markets.